British Columbia, right on. Okay, good. So, yeah, it's nice. The market timing kind of, it's fun, isn't it? With the futures market, you can do anything, any time of the day.
Yeah, I like it.
All right, MNQ, huh? This one. So it's been going up the last few hours. In a long.
Yeah, I started right at 4, 2 hours ago.
Okay.
Still holding.
All right, nice. That is an interesting setup. Let's see. You have this area here. All over here previously was support. You got the breakdown. Came back to it, consolidation. So it turned that into support again. Went up and now bounced right off of there as the market closed and reopened. It was strong, just bounced straight up. There you go. That's a good one. Nice, good catch.
Thanks.
Yeah. Oh, I was asleep. I didn't see this. Anyways, good. Cool. All right, welcome guys. So as y'all know, this is basically Q&A. Any questions you have, any screenshots, any trades you want to look at, anything at all, that's what I'm here for. And we can do this. So, yeah, whatever's on your mind. It is still before sunrise here, so still waking up. All good. So here's Sohail, Dennis. You guys are also in Canada, right?
Yeah, good morning, Avi. Yes, Canada, East Coast.
Okay. Cool. Oh, Dennis, you're in LA. It's sunset for you now, huh? Nice. Cool. We got like 4 different time zones in here. All right. So here's a fun one. I put on this trade here before the New York session opened yesterday for me. Today for all of you. It was right here where I went short, and it's still on. It hasn't gone, hasn't moved since the market closed. The targets are way down here, this area and down here. So, I mean, how many hours has this been? 12 hours maybe? It was just going or just sitting there. This is the beauty of it. To really find ways to leave it on, you'll end up making bigger trades, catching bigger moves. And the one thing that bigger moves need is time. So if you can put time on your side, I think it's great. Again, this is very different from options trading, right? Especially zero DTE options trading, which you guys saw me do. This is a totally different world. Over there, you're watching it every second like a hawk because of time decay and all those various other problems. This is it's just simpler. Again, it's simpler to put time on your side. And when you do that, then and really your mindset also shifts. It's amazing. The whole abundance mindset that we talk about. It's much easier to have that abundance mindset. You're not on the edge all the time. You can detach and let it be. And even while you're in this, something else might set up because you leave it on for 10 or 12 hours. Something else might set up, and so you can put that on as well. And it's not difficult as well to put on multiple setups. That's the fun part. So, anyways, it's something that I like. The more I do it, the more I like it. Let's put the orders in place. So I want to stop here at break even or a little better. So buy stop market. That's I've got 100 contract position here. So 50 stop there, and put the target down in this area. Buy market. So that's half the position, and the other half I'll also do it at 50. So there we go. And the target should be down in this area. That's it. So these are OCO orders. One cancels the other. And make sure they're in the same place. There we go. That's it. Not much else to do with this. All right, and we have the Qs here running up. Al, you're having a good time with this. Yeah, let's look at some of this news and see if anything would make things move. I would just look at CNBC and just down here. So Venezuela oil news. So energy news, effectively, oil being the big one. The other one I'd look at is natural gas. So let's see. We have oil already in this position, and natural gas. And then G. That's interesting. Dropped, came back up. Oh, I like this. You see where it's got resistance overhead? And it's been making these higher lows. So breakout could be good, and that's your first target. Again, looking to the upside here. Just the price action is telling me look to the upside. The news is not telling me anything about that. I'm not getting direction based on news. All I know is that there's oil in the news. Or energy in the news. So that's why I'm looking at these things. TSMC, also in the news. You guys traded this earlier? This was heavily in play. What do we have? 2 hours ago, Friday's big stock stories. Okay, this is all stock market stuff. So in there, you click on that and you find which tickers to look at. Asia markets are mixed. Chip shares. Okay, so that would be. I would look again at the Qs for this. All this news with the AI and semiconductor stuff, TSMC and all that. That's where I'd go and look at the Qs futures. MNQ. Nutrition stuff. This guy's talking about Goldman Sachs and Morgan Stanley, all this stuff. This would make me look at the Dow Jones. So let's look at that. That's this ticker here. Wow, sure enough, look at that. This jumped, huh? In the middle of the session, New York session. And now what's interesting is it's sitting here. It found resistance as expected. So here's a fun part. If you guys caught the move up, you know, where do you take it off? A lot of people struggle with this, right? Always getting out too early on your trades. To me, to find a place where to get off the trade or take it off is just look to the left. You can see this obvious resistance area. Huge, right? Every time it got there, it struggled. So if it gets there again, what do you think it's going to do? You know, so if the chart looks like this, and this is where you're getting your entry, let's say, you know, you don't just take partials all the way up and dilute your position. It's not too difficult to identify this target and then go up for that and just leave it on and hit the target. Now what you have is it dropped a bit from there, but it's again making higher lows. And you know this is overhead resistance. So if it gets into this area up here and puts in, again, this ascending wedge kind of consolidation pattern, then you're getting set up for the breakout to the upside. Again, for now, I wouldn't go shorting this thing. It's all looking very bullish. Zoom in a little bit. What do we have? Yeah, just a tight consolidation. This is a good sign. Because it's always from consolidations that breakouts happen, right? Trends begin from consolidations. And the longer and tighter the consolidation, the more explosive the breakout. So this could be fun. Something to look at next few hours. Let's see, what else do we have here? OpenAI stuff. Jim Cramer. A lot of noise. Okay, all this more AI news, China, Taiwan's semiconductor stuff. All right, Cloudflare. All right, not much else really. It's interesting. Yesterday for me, before the open, I saw something in the news. There was just a headline talking about rotation of capital out of the Mag 7. And when you see that, you begin to think capital doesn't just exit a certain market; it goes somewhere else. It goes into another market. That's why we call it rotation. And so these mega cap, big cap stocks like the Mag 7, Nvidia, and all that, if money's going out of there, then where does it go into? So I look at the opposite side of the market, which is then these small cap stocks, which takes you to the Russell 2000. And you've got that here. This is the futures for Russell 2000. And sure enough, look what happened to that. Huge move, right? Big breakout. Right about there. And this happened, what? Breakout happened at about 10:30, 11 a.m. Eastern. Yesterday for me, today for you guys, Thursday. So, the news is telling you that there's likely to be activity here. And sure enough, there was a very neat breakout after a very neat consolidation, pretty tight, small candles. Got to an obvious resistance, putting in these higher lows. Nice little consolidation there, and then sure enough, an explosive breakout. It's pretty good, huh? I was already in bed when all this happened, but looking at the news, you can see that there's going to be some activity here. So there you go. It's not too complicated. And I'm not using any sort of subscription news service or anything. This is just CNBC's website. And on that, I'm also not picking direction. That's the key. You get into the news, you start looking at it. I think the one mistake a lot of people do is they start getting a direction bias. And there's something on with the oil market, Venezuela and Iran, and there's a war or something. So you expect just on that the oil prices should go up. But if you go in with that mindset, the oil price is going to go up, you go long. Well, you end up going long in something like this. And on the other side of it, I'm actually short, just because I'm looking at the price action. So the news just tells me what to look at, and then the direction, and where to put the risk on, and basically direction. I get it from, again, price action, just looking at candlesticks. So nice and easy like that, huh? Simple stuff. I think the news makes things easier, as in I'm only using it to know which of these tickers to pay attention to. Other than that, I'm not going to pick direction based on the news. You know how that works. You guys have all been around long enough to know this. So, anyways, those are the few things on my mind. What we got here, Dennis? What was the reason I switched from DOS to this? Anyone remember the reason? I think I forgot.
You left options now in futures.
There you go. Thank you so much. There you go, Dennis. Yeah, so the reason was I'm getting interested in the futures market. And what I was using before was Interactive Brokers as my broker, and I didn't like the futures margin there, just not capital efficient. So I went hunting for a new broker, and I landed on NinjaTrader. As far as the futures margin is concerned, it's great. It works out just nice, just fine. All the leverage I want. And turns out they have their own little platform as well. So here it is. Just put it on. Oh yeah, and I think if I remember correctly, I attempted futures on DOS. And there was a certain time when the market wasn't open or was not usable or something like that. I don't even know. Anyways, I didn't want to deal with those restrictions. So and I'm quite happy to move away from DOS because my subscription fee went up to $600 a month. So I figure that's enough. There's no need to pay that. I'm not using DOS for what it's built for, which is direct access to the market, this ultra fast trading. I'm not doing any of that anymore. My trading is just getting bigger, going slower, putting on big positions, leaving it for hours. It's a totally different direction. I don't need all that fast-paced stuff. I should make more money doing things this way. So I'd rather just stick to this.
And I personally think that they took that Fibonacci level, so you're annoyed.
So what? I'm taking revenge.
Yeah.
Yeah. Oh well, they can do what they want, really. I don't control what software companies do. They can put on features, take them off. You're always going to be at risk of that if you're relying on a software. Software will evolve. Their product development team will always evolve and keep changing things. So you got to be aware of that. I mean, NinjaTrader might change something here. I have no idea. In which case, then I'll move on to the next thing. But sitting and wasting time trying to get revenge and all that's just, come on, I'm not a teenager. This is not high school. There's no point. And the Fibonacci thing, I mean, think about it. What was it? It was nothing. It was truly nothing. I just decided to try out some measured moves on the 8 a.m. candle. because the measured move concept to me always made sense. I always used it on various things. I figured let's try just measuring the 8 a.m. candle. It turned out it worked perfect. Worked perfect the way DOS was providing the candle. So it all started with that candle, right? And yeah, as long as the levels are being respected, you just start using it. There's no basis of why it should be respected. It's the market makers wanting the price to be there or any of that stuff. There's nothing. It's just the candlesticks kept going there, so I kept using it. And eventually that changed. No big deal. Now here's the fun part. Since I moved away from that, and I've explored various different ways of doing things, I've landed here, of course, on NinjaTrader. And as you can see, I'm not using any levels at all, which is really liberating, actually. It's really great. Putting on this 30-minute chart and simply waiting for candlesticks to set up, doing nothing but waiting for you wait to see a pattern that you like to see without levels. And when a pattern shows up, then I'll see, is that a place where it makes sense to get involved in the price? I'll basically look to the left and see if that's a place where the price has reacted from previously. And there you go, I find a level. Or if it's not a level and I don't touch it. So you can see how much more liberating it is to trade this way. And of course, bigger time frame, you do that on a 1 minute. Crazy, you freak out. So do it nice and slow on a 30 minute.
Sorry. Are you saying that you're not using Fibonacci levels here anymore?
That's right. I'm not using them. Not using any levels. There are no levels here. This is just a stop order and a couple of targets. No levels. I don't see any levels on these charts. Look at this. There's no levels here. I'm just watching the price action.
Right.
Yeah, nice and easy. So if you look at this one, for example, it went up from here. You can see it went up, consolidation, and then a breakout. So if I'm identifying this as a consolidation and a place I might get interested to go long, I'll just look to the left first and see if that's an interesting area. And sure enough, that's where it went long from before, and even in this area. So I would really get focused in over here and see if there's an opportunity. So that's all. That's all I'm doing, really. No levels. Yes, Sumit, go ahead.
So if you go back to the previous screen in which you took the trade, did you go over that, or like maybe?
Yeah. I'll show this to you. So zooming out a little bit, let's do it this way. What we had was, I got involved here. So as this thing dropped, then it consolidated right here. You can see it put in perfect support right there, just in this little area. And it broke down and it came back up here. And by the time I came and looked at it, it was in this area somewhere.
Okay.
And so it did the breakout, came back up, retest of the breakout, retest of what was firm support, turned it into resistance, and then I'm getting short. So that's this local price action. But then just looking to the left on this, you can see previously from this area it jumped up. So again, it had this consolidation before it really jumped. So when it came back down, it's just about in that same place. Again, if you just put a level right here where my cursor is, you can see this was resistance, and it was resistance again, and then it broke resistance. So this key area is just a level, nice and simple. And I didn't identify it as a level until after it did this consolidation here and a breakdown. And then I got involved. So that's how I did this one.
Got it. Thank you.
Nice and simple. Yeah. And this is rather new. I haven't done this before, so I'm exploring, and that's why I'm doing sim right now. So you can see here, this is a sim trade. So exploring these things and seeing if this is a good way to go.
How is it looking so far?
I like it. I like it. It's great. It's so detached. It's so simple. It's much easier trading than what I was doing before with all the 1 minute charts and levels and the 0 DT options, and you got to get out quickly, can't afford any pullbacks, all that stuff. This is just so easy, and I don't have to wait for the price to get to a level. All I have to do is look at the candlesticks. If there's news in the market, then look at the candlesticks, and usually when there's news, there's always something going on. There's always a consolidation leading to a breakout, something like that. And then just put it on and leave it. See this thing, I tell you, I put it on here before we started the session yesterday, or 12 hours ago. And we did the opening session, and that was in this area here somewhere. Since then, I had dinner, I went to bed, I woke up, I'm back here, and the price is still here. I haven't looked at it, haven't touched it. it's easy, right? I mean, you're not going to sit here and watch every 30-minute candlestick. You go crazy. So I find it a lot easier, a lot simpler. That's a good way to go.
This is awesome.
Yeah. Yeah. So, hey, it's a good thing Das got rid of those Fibonacci levels, right? We can move on into something bigger now. Always good to move forward.
I'm sorry, maybe I probably missed something, but DAS removed Fibonacci levels, you said?
Sorry, Das removed the 8 a.m. candle the way I was using it. They stopped providing the data. What were they calling it? NBBO, I think, National Best Bid and Best Offer, or something like that. And
Why did they do that?
well, some guys in here actually had emailed them and got the response that Das had received feedback that that candle was so big it was getting in the way of all their indicators, and so they just removed it. Just removed the absolute high and low of that 8 a.m. candle. So,
Are you able to get that from somewhere else?
some people have been getting it from other places, like in TradingView and stuff. I haven't explored it. I haven't tried. I'm not bothered. But some people have
That's the
been getting
reason
it.
you stopped trading that?
Yeah, when the levels were gone, I'm not using it, right? Because I don't have it. So I stopped trading those levels.
Good.
Yeah.
When did you start trading futures?
Futures? Well, I dabbled with futures at some point last year. I think middle of last year, and I think I'd say in the last 2 months I've really been focused in on trying to figure out the futures market. Yeah,
Okay.
around Thanksgiving, maybe somewhere then, I really started paying attention. And yeah, working on it. Yeah, so far so good.
So right now you have 100 contracts, right?
Yeah, again, this is a sim trade. So I'm trying to figure this stuff out, seeing if it's sustainable. Something to do.
Right.
Put on 100 contracts. When I put it on, it was I think $4,000 or $5,000 of risk on the trade. Now it's sitting at break even, and the targets are in place.
Yeah. Yeah, I want to do some trading too, but like I can't get Ninja, so I have to figure out what I'm going to use.
So as far as a platform is concerned for this style of trading, I think TradingView will work just fine because it's slow, it's simple, you don't need anything fast. I think what you got to figure out is which broker you'd like to use.
Well, I already have a account at Interactive Brokers. So
Yeah,
I don't know how their
yeah, it's
their
the
futures.
commission. It's the not the commission. Sorry, it's the margin requirements at IB that's quite high. That's why I didn't want to use them. With Ninja, it's amazing. It's quite cheap. So here to put on these 100 contracts. What is it saying here? It looks like it cost me $10,000 to put on this position. With IB, it's going to be something like $300,000 just to put on this position. So,
Seriously.
Yeah,
man.
something like that. So, just look at margins, margin requirements for futures contracts, and different brokers have different requirements. Ninja seems to be one of the lowest margin requirements. Again, what that means is you're taking on a lot more leverage. So just be careful with that. You understand how leverage works, right? It can go both ways. So I just wanted to go on and get as much leverage as I can because well, that's the way I trade. I like to keep the capital very efficient and let it run and do other things with my cash. I don't want to keep $10 million in a day trading account. I think that's just silly. There's no point doing that. Rather than other things with it. So here's a thought, since we were talking about DOS and it's removed the 8 a.m. wicks based on feedback from someone else or some other people. Let's think of this. Who would DOS listen to? Who's in bed with DAS? That if they tell DAS, hey, remove this candle, we don't want this guy Avi trading so big, and DAS will listen. Just connecting the dots. That's all. Think of that. If
You
you want to play,
serious? You can't be serious.
I'm
No
just
way.
I'm providing the
Oh.
fact. You can connect dots if you want. It's up
Yeah,
to you to
but-
decide. These are not
No.
unusual things, you know. These things happen in the business world.
No, I understand. It's just like, I mean, just because of you, they're gonna remove that candle. That
Well,
would be
wait.
insane to me.
Yeah, I don't
Seriously.
know. I don't know. Well, put it this way: go the other way around. Was my trading causing a problem for anyone else's business? So,
Well, I know what you mean.
you know how these things work. And it's quite entertaining, really, once you start looking at the facts and start connecting dots. You're like, oh, okay. It's very realistic, very possible. But anyways, doesn't mean I get all hung up on it. I just move on to the next biggest thing, right? Which is here. No big deal.
Yeah. Oh my God, that'd be petty.
Yeah,
Jeez.
yeah. I've seen some shit go on in the day trading world. That don't be too surprised when stuff like this happens. So, anyways, Amal, what you got? You got a question?
Yeah, I wasn't aware that they removed the 8 a.m. candle thing. I kind of still use it, but sometimes I see the candle sizes smaller now. So if it's very small, I switch to the 16-minute candle and kind of works fine for me. But this was something new that I didn't know that they switched. It's not the same as it was before when you used to, and that was something new to me. Yeah.
Yeah.
You think so? You think the size is smaller now, or how? What's the difference? Like,
The candles.
Yeah.
Well, good thing it's working for you on the 60. Yeah, they just removed the absolute high and low of where those transactions happened at 8 a.m.
the big wicks, like.
Yeah, basically those wicks are no longer as big as they used to be.
Oh,
So
okay.
all the levels, if you're using Avinacci levels like I used to, you'll find that there's levels, you know, literally every dollar. It's so small. Can't even use it. So
Yeah. Okay.
that's how these things work. That was funny. The moment I saw the news that DAS removed the those wicks, the absolute best national bid and offer, whatever they call it, based on somebody's feedback. It's like, oh gosh, we know what goes on in the back rooms. So fun times. Who's DAS's best customer? Think of that way. Those are the people they listen to. So, anyways, again, I take all these sorts of things as opportunities. So now I'm here and I've discovered that the futures market is a lot easier to trade than the options market for many reasons. One that you guys know of, that the problem that I ran into was liquidity. The trading there just wasn't enough liquidity to put on the sizes I wanted to put on. So there's a limitation to how much I could grow my trading. And you saw I hit the maximum in the first half of last year. And now also with the futures market, it's open 23 hours, which works for me because I'm in a totally different time zone. And there's no time decay or any of those sorts of issues that you get with options. So you can just really put on these massive trades. It's unbelievable. And on the other side of it, the whole reason why I got into options in the first place was for leverage. And I've discovered that the futures contracts have a lot more leverage than options, the way I'm using them with Ninja. So on all fronts, for every reason that I was doing options, or every reason that I was trading the way I was, and all those reasons just got better. Now I'm just in the sim, making sure I know all the subtle details here before I put on any real risk. So that's how it is. Yes, Sumit, go ahead.
So are we on that point? If someone wants to, try something else from stocks, do you suggest options or futures?
I suggest futures for multiple reasons. Primarily, it's simply easier to read the price action, much easier. It's straightforward price action that respects various indicators, and you don't have the time decay problem.
Yeah.
And again, the time zone thing is very interesting. A lot of people say you can't day trade. You have to give up your job. You have to get up early in the morning before you go to work and your time zone. What all that? I think it's all rubbish. With the futures market, it's open 23 hours. I can put on a trade right now. What is it? It's like 10 p.m. Eastern or something. Doesn't matter. So it's just so much easier. The key thing to be aware of is leverage. Just really learn how leverage works so you don't blow yourself up. That's the real big downside. If you don't understand leverage, you're in trouble. Other than that, everything else has all upsides to it with futures. And another thing with futures, comparing it to the stock market, the regular stocks, is you don't have to go hunting around for tickers every day, spending an hour before the market opens looking for tickers, things in play, finding levels on each ticker. I mean, all that stuff. What a waste of time. The futures market is not very big. There's commodities, there's the indexes, there's a couple of things here and there, and you can see these tickers I've just put on. Half of them I don't even intend to trade. And that's it. The tickers are always there. So again, even before you show up to trade, it's already simple. And you can really simplify things. It's just easy, much easier. The workflow, the process, everything. Just you don't have to do too much. Just make sure you manage your risks, which is the most important thing, and just focus on that. Really focus. I think a potential downside could be is over trading because the market is open basically all day. So a couple of things that I do to not fall into that trap is I use the bigger time frame. So I'm trading here on the 30-minute. I'm not even looking at the 1 minute. And with that, I'm also now just looking at news headlines. Like I was showing you here, just the CNBC website. And just looking down here at these headlines, and these headlines basically tell me which ticker to pay attention to. Like this one's talking about oil. So then I'll just go and look at the oil ticker. I won't bother with any others. So the news will then direct my eyes to particular tickers, and that's it. See if there's a setup there. So there's a couple of things you can do to make sure you don't get caught up in and chop and over trading and stuff like that. Simple stuff.
Yeah, I think
That's a bit.
I'm facing.
Sorry, go ahead.
So I'm saying that this is the same thing. We like mostly I also trade like Max 7 and plus two or three other tickers, and most of the time they are choppy. Then sometime I have to trade because I have to. I've been sitting for so much time, and then I started to see some patterns. And so yeah, I'm facing those things.
Yeah, there you go. You know how that goes. So now you don't have to. You can solve all these problems. Everything is solvable. It's funny when one thing shuts down, you can't do it anymore, and just start looking around a little bit. What else can you do? It's amazing what's possible. It's just the world is so big. It's amazing. The opportunities are endless. So yeah, keep your eyes open and do it. Good fun. What do we got here? Farzin, yes, got a better way. Yes, that's right. So far, this is better, and let's see what's better than this moving forward. Maybe it's time to start.
And you're right. Is when you're in the middle of something that is working, it's like you're in a 1 minute chart.
Yeah.
If it's closed, if you go to 30-minute chart, it's holy cow, there's a lot of other doors. I never noticed that. That's a good thing that they shut down that Abenaki.
Mm-hmm. Yeah, I'm grateful.
Candle. Yeah, you're grateful.
Yeah. Whoever decided to do that, well, it backfired on them. My trading's only getting bigger.
Yeah.
So it's no big deal. It works. It's great. What's amazing is what I was doing with the option stuff was, I made plenty of money last year and the year before as well. So even if I go this whole year and next year and without taking any serious real trades, it's not an issue for me. I haven't gone and blown it up on Lamborghinis and stuff. It's all there. I can sit here. No big deal. So I can take the time. I have the luxury to sit here and figure out this options market, this futures market, and see how I want to use it. So, again, this is, and my whole purpose of doing this is to make this bigger than the options trading I was doing. I want to do it in a way where it's easier and bigger, less risky and more profitable. That's my agenda. It's worth it. I've got the ability to take the time to do it, to figure it out before I put on real risk. So I'm doing it. Yeah. Always good to explore different ways of doing things when the opportunity comes. What do you got here?
Avi, do you mind if you look at MNQ, micro?
Yeah, sure. Just real quick, just look at these comments and I'll look right at it. I'm already saying you definitely don't miss waking up and watching scanners to decide what to trade. Yes, you're doing just NQ and ES makes it simpler. Good, man. Good for you. Yep, I feel the same. I'm never going to look at any tickers or anything like that. Few tickers are easier. There you go, Farzan. Good. MNQ, yeah. Who's in this? Al, I think you're in this position, right? Are you still in it, going along?
No, I exited at 25
Exit.
because there was those
Okay. Up here, huh?
resistance, yeah.
Yeah, I can see why. I mean, you can see where there was previous resistance anyway, looking to the left right there. So you exited. Cool. Yeah, so we looked at this earlier, Farzan. So what we have is, let's see. It was all bullish, came down, and it's bounced off. And it bounced off basically where it got bullish earlier as well. You can see this area where it was bullish, consolidation, and go. So that's an area of basically where things can turn. You look to the left again, you can see those wicks over there. So it's not too difficult to put a level here, just looking at recent price action. And sure enough, it happened to bounce off. If you look into this, what you have is it came down. The market closed for 1 hour, and when it opened right there. Let's zoom in a bit more. It opened right there, came down, and then put in the wick right now as it's going back up. This is potentially where I would perhaps enter if I was interested in this. I would, when it reclaims its opening price, it comes down, it's a bearish candle, but then it becomes bullish again by reclaiming its opening price. The entry would be right about there, just above the opening price. The stop below the candle, and you're in this thing, and as we just saw, the target to first target at least is up here in this area where it is now. So that's what I see it. And this area now is potentially where it could consolidate again. So that's what it did the last time I was here. And then let's see, continue up maybe.
So this is going or more bullish. It came down to retest, or it's a continuation of bearish. It's coming to retest and go back down.
Yeah, that's a good point. So one of the things I like to tell myself is that the market is going to continue doing what it's doing. Just go with that assumption until proved otherwise. So in this case here, it's just bullish. It's going to continue being bullish until it proves itself the other way. And when it proves itself, I'll show you something here. Let's see here. Here the market was bearish. So you make the assumption it's going to keep being bearish until it proves itself. So down here is the absolute bottom as it turns out. And then it goes the other way. Now, if you're in this thing and you're making the assumption it's continuing bearish, you're thinking it may keep going down. You're not thinking bullish until it proves itself to become bullish. So after this candle closes, then it consolidates, then it comes down and breaks out of this tiny consolidation. Here's where I change my mind and say, okay, it was bearish and now it's bullish. I wouldn't say down here it's bullish. Just let the reversal happen, then you catch the continuation of the reversal. So you're waiting for the market to tell you rather than jumping in down here saying, oh, it's bullish now. Or you see these wicks and you jump in bullish here, you probably get stopped out 4 times. So
yeah,
just go with that simple assumption and you kind of end up going with the trend most of the time. Avoid a few stops.
Yeah, makes sense. Thanks.
Cool. Dennis, you're also in MNQ in the sim, huh? Good. Yeah, I got into the MNQ yesterday. It was, I think here. Oh, it was here. This resistance area, and then caught the breakout, and then it's got me out of break even in this area. And the reason I looked at the Qs yesterday, I'm saying yesterday, it was yesterday for me, still today for you guys in North America. The reason I looked at it here was because of all the news on the semiconductor stuff. As far as futures go, it would be just looking at the Qs when you have news about AI or semiconductors and all that. And the price action was bullish all this way. Go up, consolidate, then that next breakout. That's where I caught it. But didn't survive the pullback. Just stopped out of break even. So simple way to go. No big deal. The one that really interests me is silver. This one is the most leveraged thing I've ever seen. It's crazy. Each point here is worth $1,000. One contract, and this thing moves 1 point. It's $1,000 move, and it only costs $250 to get one contract put on a trade, either long or short. So it's it's insanely leveraged. And we know these things aren't played with all the geopolitics and the world in turmoil and all that stuff, Venezuela, Iran, or whatever's going on. Commodities, precious metals, energy. This is the stuff that's on the move. So I've got a close eye on this stuff these days. Let's see. So here it is. There was news about 2 days ago about something about people buying up gold and silver. Anyways, nothing new right now. It's too early or too late, depending where you are. Anyways, what else is on your mind, guys? Sun is finally rising. Beautiful out there.
You took the silver trade a few days back, right? A couple of days back.
Yeah, I put on something on the sim a few days back. I think it was here where I got this little breakout to go, and it didn't go a long way and got out of break even or something like that. May have been here. This was a good one because this was the all-time high, and it approached it very bullish, and the breakout, and here's basically the bounce off that previous all-time high. So yeah, it's on the move. And you can see these are putting in some big candles here compared to previously. These are all small candles. These last couple of days, it's been bigger. So just looking at this, you can see it's in play, and there's some activity in this market. Oh yeah, I put on a crypto trade. I think I did this with a live account. Yeah, put on a small risk. I think I put like $400 or $500 of risk on this one. So this is the Bitcoin futures. What you have here is first you have this high over here from resistance, and then you have where it made the high here and then gapped up. I closed it for just 1 hour. The market closed, and then when it opened an hour later, it was up here, above that previous high. So it sits there, and I watched it came down, and then bounced off. Look at that, came down and bounced off, pretty much that gap. You can see that. So once this then put in a bullish candle here, what I'm thinking is this was a consolidation. Here's your breakout. Here's your retest after this bullish candle. So I got in this area just above, just at the new high with the stop below. And all you got to do is just let it go when it wants to go. And sure enough, it went, and it hit the target. And that was my target, that 9800. I based it off of, I think it was measured move from here. So measure the bottom to the top here. And you just measure it out and put the target just about in this area somewhere. That trade worked out very nicely, nice and simple, not too tricky. And in this case, when you see there's a gap, you don't actually have to go and look at the news. You just see there's a gap, so you know there's something making it move. There is a catalyst, so you can look at it. And if you're getting a good breakout setup, take it. No big deal. And every couple of days, there's always some news on crypto. Now something makes it move. This is, again, a very simple setup. Breakout, retest, go. Don't need much else. Just to simplify trading, instead of having 5 different setups, I'm just looking at one, which is catch the breakouts. And again, there's only 2 phases of the market. Like I said before, there's consolidations and there's direction. That's it. So sideways and direction. And typically, well, after it's been sideways, it goes directional once it does a breakout. So get in at the breakout if you can identify it. And then I explored why do breakouts happen? Well, typically there's a catalyst, some reason for it to move, for people who want it to move. So that's where looking at the news headlines makes sense. So I'm just doing that. No big deal. Yes, Sumit, what's up?
So Avi, when do you catch a breakout versus wait for a retest? I mean, sometimes the catch is so sometimes it's so explosive that you want to be there.
I know what you mean. So let's find some examples of that here. I think I saw something here. Okay, there we go. So this is the MNQ a couple days ago. You can see here there's support, right? Very obvious support in the same place. Now, as it came down towards the support, sure enough, it did a breakout. What I'm looking at is during the consolidation before the breakout, I want to see the wedge. I want to see, in this case, we're looking at a short. I want to see lower highs before the breakout happens. You can see lower highs, and then sure enough, it shot right through the level, the support, and it went. And in this case, it even went back and retested it almost precisely, and then put in the big move. So there's a few different elements I like to see. One is this wedge, in this case, a descending wedge before the breakout. When I see the descending wedge, it gives me more and more conviction that this side of the market is taking over. In this case, the sellers are taking over. They're selling at lower and lower prices. And so when the breakout happens, it's likely to be a genuine breakout on a 30-minute chart. On a 1-minute chart, I don't bother with breakouts. I would just wait for the retest every single time, even when I see the wedge over here. But on 30-minute, because it's so big, you know, within the 10 minutes on the 1-minute chart, you'll have a retest over here. You won't even see it on a 30-minute. Don't bother. So here's where you would think about entering short and a stop above the entry candle. But now in this case, to enter short here and put your stop above the entry candle, your stop is so incredibly wide, it has to make a huge move just for 3R. So in this case, I won't enter, just because the risk to reward is out of line. It's not there. So in this case, everything lines up except the RVR. I would not enter. Now then you let it go. When it comes back and retests, in this case it does, it puts in your bearish candle. You enter the new low of the bearish candle. You can put your stop above it. You're getting a better stop, a better entry. So you're getting the breakout after that wedge. Then you're getting the retest with some decent RVR. And then you can have a really good entry and let it run. So there's little subtle details here. You're looking for the wedge before the breakout. On a 30-minute chart, I will enter at the breakout if the RVR is good. And then I will also look at the retest. If it's there on a 30-minute chart, I'll take it. On a 1-minute, never. I just don't want to trade breakout. I don't even trade the 1-minute anymore. But on the 1-minute, just wait for the retest every time. And even on the retest, you get faked out so many times, it's not even worth it. So those are how I like to do it.
Oh,
if you look at this area,
you made
no
it.
problem. No worries, nice and simple, right? Look at it. This area, you had that resistance. Sure enough, it got up to resistance, and it put in another minor resistance here. So you can identify this resistance. Let's zoom in a bit. You know, these candles are. I'm losing my eyesight, man. I get reading glasses soon. Here, resistance again. It put in some local resistance, right? And then it put in this long tail hammer. Now that's something also I like to see. Long tail hammer sets you up for the big move up. Nice and easy. So once after this long tail hammer with some room to the left, just a little, it's stuck out of the consolidation. On a 30-minute chart, it makes a new high. You enter the new high, which would be somewhere in this area. Stop below the entry candle, and your target's up there. Sure enough, this happened at the open, I think, New York Open. Within half an hour or 1 hour, you've made $1 million. No big deal. So there you go. That's how I'm doing these breakouts. And really, I'm only looking at breakouts now. I was doing various other things you guys have seen. But now it's just making it easier. There's no real need to do much else. There really isn't. Trading is becoming such a, I don't know, low, what do you call, low effort task. I gotta find other things to do. So I could just show up and look at it for a little bit and either put it on or don't. So
Are you saying you don't look at the volume anymore at all?
yeah, no volume. No volume bars on this chart. I mean, there's no indicators on my chart at all. I even turned the red candles to gray. Look at that.
I mean, at some point you're gonna get rid of chart like the candles too.
Yeah, I did at one point. I tried that.
The price gonna go up, down, and you're gonna know where to enter, where to exit.
Yep.
Awesome.
Get rid of it. Here, I'll look at this. Just see this? The price is going up or down. Okay, I know what to do. Just look at this area. Look at the oil market here. Okay, it's going down. Let's short it there. Done. Natural gas is up. I did try trading on the line chart, and that was really interesting. I liked it. I thought it was easy, but a lot of fake outs. I mean, you can spot the patterns just as you do here, but it got a little more tricky. It wasn't. I just wasn't convinced of it. So there's many ways to trade. Hey, back in the old days, when guys like Jesse Livermore would just look at the tape and trade, and he would call the broker and ask the broker to read the tape to him over the phone, and then he'd make a decision right there on the phone and put on a trade. Like, wow. And this guy made millions and billions and lost it all and made it back again, and I don't know what. So, there's no wrong way to trade. Just got to find a way that you can do. That's important. There's
Well,
no
I think
such thing.
that's definitely the wrong way to trade, where you lose all your money. That's the wrong way to trade.
Yeah, of course. As in, the only wrong way is the way where your losers are bigger than your winners. But as far as trading strategy is concerned, there is no wrong strategy. You got to just create a strategy or discover a strategy that works for you. There's no such thing as a magic indicator and a magic strategy, and all these guys on YouTube will tell you this stuff. You got to follow this strategy, turn $1,000 into $100,000 in a month, and all that. Oh my God, what a lump of crap. You got to figure out a way that you can execute consistently without stressing yourself out, and build into your strategy must be RVRs. Your winners are bigger than your losers, and you work it out just fine. All this stuff of just trading the futures without levels, just on candles. I mean, I'm just doing it. It's not popular. Nobody out there is advocating this stuff. Instead, people are all about VWAP and ORBs and stuff like that, right? That seems to be popular. But that's a sure way to blow up an account. I mean, most people blow up with that stuff. I've done it. So that's how that works. But again, your trading style should be a reflection of your personality. Otherwise, you can end up fighting yourself all day long while you're looking at candle charts. You don't want to be fighting yourself. You get exhausted just fighting yourself. Forget about risk management after that. So it should be simple to you, easy for you to decipher, easy for you to understand whether it's worth putting your money at risk or not. It shouldn't have to be a mental and emotional battle all the time. Absolutely not. So work out your style that way. So you're just asking about volume. For me, the volume bars confused me, and it was always an internal battle for me. It's like, is there enough volume? I know there's supposed to be increased volume when this thing happens with the candlestick, but is that considered increase? Is that enough of a spike, or should I wait for it to have more than that? It's just so subjective, and it drained me. I don't want to use that. Turns out moving averages did the same thing for me, and so did all these indicators. So now they're not here anymore. Even the color of these candles, like it was red and green before. Well, I realized the colors were stimulating, making me more anxious. So, and that's a more subconscious stuff. Once I became more aware of it, I just turned the colors around. Here it is. It's black and white, or gray and white. So it's not stimulating, not triggering, flashing red lights and stuff. None of that. It's really mellow. And that's where the big millions are made. Just keep it simple. Yeah, fun. So what else y'all want to talk about? Who else got things on your mind? Look at that. The sunrise is something else. Right now it's reflecting off of the neighbor's glass windows. It's all golden. Very cool. So what do we have here? A few minutes more, and then we'll end this recording here. What else is on your mind, guys? You all know how to trade futures, leverage, 23-hour market. It's not day trading anymore. It's really not day trading. The popular concept of day trading. What I'm doing is something completely different nowadays. It's just bigger. Go at some point in the next 10 hours, ideally, it goes into these targets. Natural gas. Oh, we were just talking about it, weren't we? A little while back here. Looks like it did the breakout on a 30-minute chart. Consolidation breakout. If you entered this, let's say 10 minutes ago or so, you'd enter pretty much where the price is now. Stop below that entry candle. There's your first target. You got a second target there, and then going further up into all these resistances. And give this thing hours and hours to go. It's going to take 10 hours to get there if it goes. Give it the time. What you got, Mohit? If this current 30-minute candle on MNQ also closes as an inverted hammer and a lower low, which is short. Firstly, I wouldn't enter short if there's no news. I wouldn't enter at all if there's no news on it. Secondly, you're asking if it closes as an inverted hammer. Okay, see, the way I see it, just looking at this chart the way it is, when I look at these hammers, I want a long tail hammer. Here's a long tail hammer. You see this one? Look at the tail on this one. Now look at the tails on these little ones. I can hardly even see it on the chart. It's so tiny. It's like little indecision candles. I don't call these hammers. Yeah, you want a really serious wick. If you want to go short here, while the price action is genuinely bullish, what you need is a very serious indication that the sellers are taking over from the buyers and ready to truly push this thing down. These tiny little candles are not giving me that conviction. If I see a massive long tail reverse hammer, then a new low, and all this is happening at an interesting level, and there's news on it, then I'll say, all right, it was bullish, now perhaps it's bearish, and then my entry might be down here someplace. So, you know, there's a long way to go before I would even think about going bearish on this price action. Yeah, Mohit. Well, not so much ignore tiny candles, but more, again, make the assumption that the market will just keep doing what it's doing. If it's going sideways, it's going to keep going sideways. If it's going up, it's going to keep going up. If it's going down, it's going to keep going down. And then in the middle of the market doing what it's doing, you come in and say, now it's going to suddenly do the opposite based on a couple of tiny candles. I'm not going to put risk on that. No way. So just think of it in those terms, and then you'll avoid these fake out reversals and stuff. Makes life a little simpler. Yes, avoid tiny candles. Cool. All right, guys, that's been an hour here. We'll end this recording. This has been fun. So as always, we'll do these sessions twice a week now. Wednesdays and Fridays for me. So for you guys, for most of you, that's Tuesdays and Thursdays. Man, these time zones get me all mixed up. So yeah, we got these sessions. So I won't be showing up to the open Friday, today, Friday. We'll do these sessions instead twice a week, and then 3 times a week I'll show up at the open and do the opening sessions as we do. But anyways, for these sessions, be sure to come ready with your questions. You know, put them in the Discord. We have the forum section for this if you need to put it there, and then we can go through them. Or screenshots if you want me to look at trades, we can look at them together, trades you've taken, or journals, or whatever. That's the whole point of these sessions. The market is very slow, so we can actually get into depth with various subjects. So anyways, good fun. I'll take it easy. If I don't talk to you, enjoy a good weekend and enjoy the trading day. Thanks for hanging out, guys.
Thanks, Avi. It was very helpful.
Thank you, guys. Yes.